Hello, this is Dr. Bhushan Chandra. Now today we are going to see some day trading strategies which are related to IndiaVIX. This video I actually divided into three parts because one video was becoming too large. So part A we are going to see in this video, part B and part C will follow. Now we have already seen what is IndiaVIX. IndiaVIX is average volatility and calculated on annual basis, and we can calculate VIX for periods shorter than 1 year also. How to do that? See the number of sessions of identical time span. How many are falling in 1 year? And square root of that number. You divide annual weeks by that square root and you will get volatility in that period. For example, as there are 12 months, if you divide annual volatility by square root of 12 months in a year, right? So square root of 12, you divide annual volatility by that, you will get monthly volatility. Weekly volatility, you have to divide by square root of 52. Daily volatility, you have to divide annual volatility by square root of 250 because there are 250 trading days approximately in a year. At the same time, keep in mind, IndiaVIX gives you levels only for Nifty. So other instruments, futures options, there may be slight breaches. Other stocks, this is for spot Nifty, it works perfectly, quite good. But Nifty, Bank Nifty, or stocks, you cannot use IndiaVIX as it is. You require some modifications. Okay. At the same time, as this course is about Nifty and Bank Nifty, and Bank Nifty doesn't have IndiaVIX, so I'm going to stick to Nifty in this study. Now, anyway, we have already seen how to calculate for a month, for a week. Now, let us come to the daily limits. There are 250 trading days in a year. Naturally, VIX would be obtained, as I said earlier, annual VIX divided by square root of 250. So if annual India VIX is 20, 20 divided by square root of 250, that is 15.81, comes out to be 1.26. What we mean is, we are expecting Nifty to remain between 1.26% up or down for the day. Okay. So at the open, if Nifty is 18,000 and India VIX is 20, what would be Nifty limits? That 1.2% what we saw below 18,000 and same percentage above 18,000, 1.26%. That would be the limits for Nifty. Does that mean that these will be obeyed or these will be touched? See, my observation is majority of the times it's obeyed. All right. At the same time, there are exceptional days when this range may be breached. And then you will find sudden rise in volatility many a times. Okay. So 1.26% from 18,000 comes out to be 17,774 on the downside, 18,226 on the upside. So Nifty is likely to remain between these two trading levels today, if VIX is 20 and if Nifty is around 18,000. So a simple effective trading strategy: sell, call and put at the upper and lower limits respectively as soon as the market opens for the day, and which expiry, whichever is the nearest expiry, sell for that, and close both the positions as close to daily close as possible. 78% of the times Nifty closes within these limits, and call and put together gives you some money. Near the expiry you get better percentage returns. Okay. India VIX may be anything, success rate remains almost the same because we are anyway considering India VIX in our calculation. Alright, but unusually high India VIX, India VIX greater than 30 or 35, I would say don't use this method because the moves are very sharp sometimes. Means up to 30 to 80 it can just run. So you will take a position considering it is 30 and within minutes it may be 40, 50 and the limits widened accordingly. So do it only when VIX is not more than 25, 30. Then it gives best of the results. Okay. Another method of trading is calculate a limit for hourly or 15-minute period. How can you do for 15 minutes? Okay. How many 15-minute periods are there in 1 year? 1 year. Find that out and use square root of it. So when Nifty comes near the upper limit, go short. Keep a stop loss slightly above the upper limit. It can very well go up to upper limit, but so stop loss should be slightly above it. When Nifty comes near lower limit, go long, keeping a stop below lower limit. You can also use 10 days exponential moving average to filter the signals in order to minimize the number of fake signals. Question is, does this really work? Okay, so since 1st January 2011, I have checked at the end of the day how many times upper limit is reached. It was reached about 15.6% of days, and 84.4% actually upper limit was not reached. Um, and though it crossed 15.6% of the days, only 9.3% days the daily close was above this level, above the upper calculated level. Okay, lower limit was reached almost 25% of the days, but close below the lower limit was only 13% of the days. So the remaining times, almost half the times, it crossed lower limit, but again came up and closed within the limits. So within the limits close, significantly high number of times you get. Okay. So 78% of times, the close for the day is within the calculated upper limit and lower limit when you calculate from the day's open, not from yesterday's close, from today's opening price. All right. Now, what is the relation with IndiaVIX and what is the success of the method? Let us see that. If we see, actually speaking, all values of IndiaVIX range, if you take, irrespective, whatever may be the value, you are going to do the same thing. Then 15.6% upper limit is hit, 24.9% lower limit is hit, and 59% neither limit is hit. But remember, close is 78% times within the limits. So remaining 19% of time, though it crossed the limits, it again comes back within the limits and closes there. If VIX is 12 to 18, 18% times upper limit hit, 25% times lower limit hit, 18 to 20 also almost the same. In general, if you see top to bottom this entire table, you can say that 17 plus or minus 2.5%, 3% times upper limit is hit, and roughly say 25 plus or minus 2-3% times lower limit is hit. Whereas approximately 60% times, 55 to 60% times, neither limit is hit, and even if the limit is hit, it means what? It is crossed, touched or crossed. It again comes back, and 78% times in all, in as an average, the daily close is between the upper limit and lower limit which we are calculating. All right. So this strategy, more than 3,000 days it was tested, and is found to be successful strategy. So more about this in the next video.